Welcome back. As we're seeing a bit of a sell-off in staples, just keep an eye out on Marico. The stock is at the low point of trade, but the company reported a third quarter which was better than its peers. Margins were under pressure on account of increase in key raw materials for the company. Let's connect with Saugata Gupta, who's the MD and CEO of the company, to get more sense on their third quarter performance, the outlook on that as well. Saugata, always a pleasure speaking with you. But before we speak about the performance, everyone's talking about this being a consumption-led budget itself, a consumption-focused budget. The cut in income tax expected to give a boost to urban consumption in particular. How do you see this as a move from the government, your comments, and how does this benefit a company like yours?
I think this will be a very big game changer because at the end of the day, I think if you look at the overall consumption situation, there was some stress in urban. It was a combination of inflation, the fact that real wages hadn't increased significantly, and also the fact that there hadn't been tax breaks in the last couple of years. So this will definitely spur consumption, and just not in FMCG, but if you look at it, could be QSR, apparel, some retail, two-wheelers, entry-level cars. So I think it's a overall good thing for the economy, and also I think it also improves sentiment. Sometimes sentiment also somewhere curtails consumption. So I believe this will be very good for the economy and a lot of sectors, and this will also drive therefore more demand, and leading to further investment if there is more demand and capacity creation.
Right. Saugata, with this boost in consumption that is expected, will you upsize your growth outlook as well going forward?
It will be, I would say there will be tailwinds to drive our aspirations. As you know that even in a difficult quarter, we delivered a 15% revenue growth, and in spite of significant input cost inflation, we delivered a decent bottom line growth. So what we have said in the outlook that we'll continue to deliver double-digit revenue growth, top quartile volume growth, and of course there would be some maybe transient profit in the couple of quarters, but that over the medium term will sort itself out. So I think this will just aid the consumption, and fortunately for us, if you look at our diversified portfolio, which is completely urban, Saffola is completely urban, so 70% of our portfolio is urban centric, so this will help.
All right, 70% of your portfolio urban-centric. This will be a tailwind in your double-digit revenue growth aspiration. But margins, that's been the pressure point, right? Let's talk about that. Oil prices, copra prices saw steep hike year on year. How low can your margins go from here on, and by when do you expect them to improve?
Look at copra cycles is usually a 18-month cycle, 15 to 18-month cycle. We are at the fag end of the cycle, so things will obviously sort itself out sometime towards the end of quarter one. And as we said, that we will be able to deliver margins around 20. So maybe there would be some transient headwinds at the beginning of the year, but it will ease itself out, and as we go through the year. I think our entire endeavor is to ensure that we continue to invest. We'll obviously have very, very institutionalized cost management programs that drives efficiency, but we're not going to, if you notice, we are one of the very few companies who have not cut A&P to manage margins, and therefore we'll continue to invest to grow. And I think the biggest tailwind for us is a combination of two factors: our diversification strategy, which is of foods, digital brands, and premium personal care, and our international business continues to do well. So it somewhere, gives some air cover.
And since you spoke of diversification, Saugata, if you take a look at your diversified portfolio, what is the difference in your overall portfolio margins compared to the combined margins of your diversified portfolio?
I think we have had significant improvement in margins, and we believe that, to give you an example, with scale, our oats portfolio is near about the company EBITDA. If you look at Beardo, we are already hitting a double-digit EBITDA. Plix is a brand which is expected again is in the positive territory. There is very little bleed in the two other digital brands. So the digital business is expected to hit 10% EBITDA in the next 3 years. Even we have if you look at our journey of margin expansion continues in the international business, especially in the Middle East and North Africa, where we are aggressively getting shares from competition. So there are enough levers to drive the margin. And I think the effort has been to that we have been extremely conscious of the fact that we will not drive disproportionate growth at the cost of margins in the digital business, and therefore having a lot of cash burn, which we have not been doing. We have been extremely prudent. We are happy with the 35%, 30% growth in the digital business, but doing it profitably.
Right, that's about the digital business, but let's talk about international business. You briefly mentioned into it. You were also looking to diversify away from Bangladesh. Where does that number stand at right now, and what's your target in terms of margin expansion or margin aspiration in the international business from here on?
We have been aggressively driving diversification on two fronts. One is that how do you have a business beyond Bangladesh? Bangladesh business now contributes to around only 40%. Some time ago, it was 50-55. Secondly, what we have been driving is reducing our dependence on coconut oil and some of the core brands. So there has been a huge journey in that diversification also. We are now present in categories like, if you look at shampoo in multiple countries, we are into body care, we are into multiple categories across some of the markets. I think 2 or 3 of the markets that are delivering significant growth one has been Middle East and North Africa, where we have been gaining, where we had a slightly under index presence, and the profit pool and the pool for top revenue was very high, and therefore we have been rapidly gaining market share as well as growth, and we are extremely confident of delivering 30% plus growth in that market. South Africa has played well. Our new country development has been also doing well. We have been extremely careful about expanding in Africa with less capital and less boots on the ground, because we believe that's a smarter way to expand. We are also doing we are also expanding into some of the other markets, including Southeast Asia. So I believe there is headroom for both top line growth and as the mix improves, the kind of an EBITDA improvement even in the international business. But I think having said all that, I think our Bangladesh business has been extremely resilient. We continue to grow double digits, and we are confident of growing double digits in that market.
And that's some optimism, Saugata. There is optimism all over your commentary in general as well. But aside of this optimism, is there any risk that you foresee?
Obviously, there could be black swan anywhere. I think that is something there. And obviously, we have to do a much better job on value-added hair oils. I think the others is about keeping the momentum and managing the medium-term, or rather the short-term margin pressures. But I think in India, one category we haven't done well is value-added hair oils. It has to get into positive. And I think international, we have to be careful about whether it's geopolitical or currency, those black swans, but we need to be careful about. But I believe strongly that in today's world, there would be, volatility, there would be, black swans you have to embed into the business, and ability to anticipate a risk or anticipate an opportunity and being resilient is a critical, differentiator for organizations.
Fair point there. Candid of you to admit that, value-added hair oils is where you have to do a lot more work. We'll talk about that at another date. But is there any other category that you're eyeing in the diversification strategy, or anything that you're actively pursuing?
One of the things we want to look at is in foods. We already present very limited. We are prototyping on snacking and breakfast. I think beyond oats and masala oats, which is now critical mass, we need to create some big scale in 1 or 2 of the categories, and therefore we are just about wetting our feet on snacking and breakfast. We have launched muesli. So these are the 2 categories we intend to grow.
And any inorganic opportunities in the near future, or your plate is full?
Enough on our plate right now, but we keep on looking. That's something is a part of life.
All right, we take that point. Thank you so much for joining in. Double-digit revenue growth with margin pressure alleviating from the first quarter of FY26 with tailwinds coming in from the budget. Things look good for Marico, but the company should be walking the talk from here on as well, and that's what the street will eye as well. Take a short break, come back at you more on the markets and stock-specific action on the other side.